Hi, welcome to the SPAC panel. My name is Crystal Tse. I'm a deals reporter at Bloomberg covering IPO, SPACs, and M&A. Joining me today is Betsy Cohen. She is the chairman of FinTech Masala. She has raised 9 SPACs, and 6 of them have announced deals. She focuses on fintech. One of the busiest sponsors out there, some of the companies she took public include Perella Weinberg, Payoneer, and eToro. Welcome, Betsy.
Thank you. Thank you very much, Crystal.
Yeah, well, we're so many times, and throughout the 2 years from the beginning of this SPAC boom, which is probably when Virgin Galactic went public, like things have really changed. We're kind of 2 years in. Like, where are we in the SPAC market right now? People like to say there is a SPAC bubble. Is there one? Like, are we coming to an end in this SPAC world?
I think we're coming to a middle, not to an end, because I think looking back over maybe a 20-year period, that IPOs and other instruments have had cycles, and I think SPACs are no different. The SPAC is made up of several components, and so you do have the public market, but you also have private investors who are looking to establish positions without running the price up and therefore participating in the pipes. And so if they believe that the market is soft and they can buy on the public market as easily as investing in a private investment for public equity, that will cause a diminution in the number of pipes that will be actually completed. We'll see some failures, and the cycle will then cleanse itself, and we'll move to a new point in what might be a deflated SPAC bubble, but really focusing primarily on the ability and experience of the SPAC sponsors who were left.
Right. So you're saying that we're kind of in the middle. I wonder how much time do we have in this wave, like until kind of pipes get way too difficult or that public investors just are no longer interested?
It's really hard to predict. I would say that we'll have some portion of the shakeout within the next year, but it really depends upon the cycle of the greater market, their macro trends that really push this along as well. If, in fact, there is tremendous interest, not so much in fintech, but maybe in biotech, then biotech SPACs will move forward. It really is not a single asset class. When Virgin Galactic got completed, it was the first of a series of what I'll call dream SPACs, where the public market and even the private investors wanted to believe that something very special was going to happen, even though it was hard to be grounded and predictive of what might happen and the time frames for it, because it hadn't happened before. The same phenomenon is occurring, has been occurring, or was occurring with electric vehicles. So there are dream, and they are one asset class, I would say, dream SPACs that may have begun with Virgin Galactic.
Right. Yeah. So these like pre-revenue spec, like you said, the space tourism, the electric vehicle, the flying taxi, have most of them like fallen out of favor with investors, let it be pipe investors or like public investors or even retail investors?
I think the uncertainty of the predictability, which is really what SPACs are based on. You can provide investors with a look forward in a company that's growing quickly, but it has to be based on something. And in these segments that you've just mentioned, it's very hard to time those predictions. And so people get disappointed. They therefore pull back. Something wonderful occurs, and they go forward. So there are a lot of macro trends which fall underneath the success or failure of what we'll call the dream SPACs.
Right. And you talked about kind of prediction, which is one of the most unique element of the SPAC. It seems like the SEC is a lot more vocal about kind of estimates as well as other potential regulation that may come. What do you think like scared them, the regulators, and kind of where do you think this regulatory landscape is going to look like in a few months or in a year time?
Well, I think when the regulators began to look at SPACs, there were many, many fewer what we're calling dream SPACs. So that most of the SPACs were based on some historical and potentially more predictive, certainly in the fintech area, predictive models. As you added less predictive models, the SEC recognized that uh, they perhaps had not been looking at the prediction criteria, as strenuously as they could. And so I think appropriately, they're now digging in and taking a harder look at, are these numbers just made up? Did we pull this out of a hat? Is this what we
Mhm.
want to, or is this actually an extrapolation, as usually is the case in the fintech area, of what has occurred in the past?
Right. So it seems like you think their SPAC market should be divided into two, like the dream SPACs and like the non-dream SPACs. And so for if I were a retail investors would not, I don't have like millions in my portfolio, kind of how do I know like what sponsors to back and like how should a retail investors pick and choose like what deals they want to participate in?
I think it's tough. I don't think it's an easy thing to do, but I think you have to look at a sponsors and retail investors. We're not looking at sponsors, but you have to look at a sponsor's history. Certainly if someone has done multiple SPACs, they should know more than someone who's doing it for the first time. Doesn't mean that first time issuers are not good to look at, but you'd have to take it with a grain of salt, as you do in every business. So there's some history, some success record or lack of success. All of those are publicly known facts, but tough for the retail investor to access.
Right. And in terms of like serial SPAC deal maker, you yourself are one. You've raised 9 SPACs. Some sponsors out there are saying they want to do things alphabetically, go from A to Z. I wonder what is your end goal? Like, where do you like? How many SPACs do you think you would do? Like, what is the end game here for you?
The end game is finding good companies and taking them to the public market when they're public ready. And so we're very, very dull and boring in that we really are looking at fundamentals. We're in an area which we know. We've been operators and founders in this area. And so we continue to search on behalf of investors for good companies that will make good private companies that will make good public companies.
Right. And a little bit of a more technical question is, we have seen in the SPAC world very high redemption lately on some transactions, as in investors don't want to participate in a deal and they choose to redeem the $10, their cash back instead. Is this a sign from the market that we don't need 400 SPACs out there? Like, what do you think of the fate of these like more than 400 SPACs out there finding targets today?
Yeah, I mean, I think 30% of them will fail. Maybe that's not exactly the right number, but in the neighborhood, because they won't be able to find either. They won't be able to find companies within the time frame, or they will find companies within that time frame, but the public market investors will not support them. Traditionally, the pipes have been done to validate valuation, and that's not happening as much today. You see private equity funds that are both the pipe investor and the private equity, and excuse me, and the sponsor uh, investor. And so you have an inherent conflict there, which probably is not a good thing. And public investors are very quick to understand that the valuation hasn't been validated by anybody except people with an interest in completing the SPAC.
Right. And in the beginning of this SPAC boom, there seems to be this concept that if you do a SPAC, you may get a valuation arbitrage. You may get a higher valuation compared to if you go public through the IPO. Is that still true? Has that ever been true?
I actually don't think it has been true. I mean, I think that there are instances, as there always have been, with or without a SPAC market, where IPOs are priced at a point where the deal can get done unquestionably, but the company is actually leaving a lot of money on the table, and the stock then pops because the valuation is, in fact, higher than the pricing. This has been a phenomenon for a long period of time. And if, in fact, you don't have that validator, as we have over the last couple of years of valuation, then you're going to have people in the public market, retail as well as non-retail, who are concerned that they're overpaying and therefore going to redeem. The redemption is really done because they see that they have earned as much with what is in the trust as they would have if they put it into a savings account in a bank.
Right. And more about you, Betsy. There has been so many exchanges and regions out there, Asia and Europe, that are trying to introduce this SPAC into the local exchanges. Would you be interested in raising a SPAC outside of the US?
Absolutely. We think that certainly the pandemic showed us without question that within tech and fintech in our areas, that the world is really one. And so we're very interested in pursuing European, Asian, Singaporean, whatever the appropriate regulatory framework is, where there are companies that are growing and doing exciting things. And that can be any place in the world.
Right. And that's for the target, but will you raise a SPAC that's kind of like listed elsewhere?
Yes, I'm sorry. I was really also talking to the opportunity to raise, the US markets are the most liquid. So and often the targets want to be on the US markets. So it's a matter of finding the right target who is comfortable on maybe a newer and less tested exchange.
Right. Well, the last question before I let you go. Almost everyone have a SPAC these days. Is there anyone out there who you think is qualified but still haven't raised one? And you think, there you go, you should raise a SPAC too?
I can't think of a single person. Everybody and everybody's brother-in-law have raised a SPAC now. And so I think it's about time to focus on experienced sponsors.